Hi everyone, welcome to Vegas Realty. I'm Trina Larmony, where we discuss everything you wanted to know about real estate in the Las Vegas market. Today we'll be talking to an industry expert in lending. Hi everybody, welcome to Vegas Realty. I'm Trina Larmony, and today I'm here with Alex Pearl as well as Rose Taillie from the Loan Depot. And I just want to get right into it. Alex, what challenges are you facing today with real estate, with purchases, and the current lending market?
Well, to begin with, typically, if we're going to start looking, a lot of people are looking because they either have equity in their home, so sellers are looking to sell and then buy, so they're going to need a lender. And then first-time home buyers, especially our first-time home buyers, aren't familiar with the process at all, and it seems a little daunting for them. So we typically will just sit down, have a conversation, and introduce them basically to a lender, which Rose would do. It's as simple as a phone call, literally a phone call, getting to know, who my client is, what they do, and what their expectations are.
Okay, so you have the phone call with the buyer, and you get their information, and then you pass them off to a lender like Rose.
Yes. Like, for example, this week I had the pleasure of meeting a young couple who's going to embark on trying to purchase a home, and they confess that they've probably been waiting a good 6 months to a year to start looking because they were really terrified of how do they start and who do they talk to. So after sitting with them, I sat with them probably for a good hour, just because I like to get to know who my clients are. They're a young family, they both work, and they have children at home who are going to school. So we sat down, I broke it down, then we jumped on a phone call, and the three of us had like a conference call. And we talked about, where you start. And it's literally like, who are you? What do you do? What are your expectations? What do you see in the next, 3 to 5 years? Okay. And we jumped into how long have they been working? Where are they working? Things like that. And so they directed their questions to the lender, and I was there to kind of supplement and break it down in between.
Okay. Yeah. Okay, so Rose, that brings me to you. I'm the new home buyer. I have no idea what I'm doing. I don't know where to start. I know I want to own a home. What's the first thing that I need to do? When I meet with you, do I have certain documents that I need to bring with me? What do I need to do? What do you need from me to help me get my best outcome?
Yeah, of course, that's a really important question. Probably the most important, when most people, when they're buying a home for the first time, they do not know what do they need, how long they have to be in the job, what the credit score needs to be, and all that stuff. And that's my job. A really good loan officer will guide the client from the moment they get that first phone call. And I always let them know, okay, this is I have a list of documents that I need dependent on if they are self-employed or W-2, whatever it is. I know what I need from them in order to start the pre-approval, right? Okay. So, and that's my job. From that point on, I take it over, until I get that pre-approval letter, and I give it to the realtor and let them know, okay, they are ready to start looking at homes. And then from the moment they start in contract, then that's all those 30 days, they are my clients, and I guide them every day, what do we need, and everybody will get an update or how we're doing.
Okay, so, go ahead.
I was just going to interject, even the part where it's between the pre-approval letter, and there's two. It's one where you would pull credit, hard credit, and then the other where you're just taking a glance and you're going to kind of estimate where you think that they can, the price range that they're in. So something even just as simple as that. is beneficial, because a lot of times a client will get confused between the two. You know,
Right.
they think, oh, okay, well, I've been pre-approved, when they actually haven't gone through the process, and they're surprised. But if you kind of take it from the beginning and you break it down, it saves a lot of surprises down the line. You just better prepare.
Yeah, which is very important, right? Because a lot of lenders out there, they give somebody, which is, you know, okay, yeah, you do qualify for the X amount, and they haven't even looked at their pay stubs or W-2s, and that's very dangerous, right? To give somebody a letter like that to say go shop, because at the end, the underwriter is the one who's going to tell us if the client qualifies or not. So I am, you know, really good at what I do, and I don't want to disappoint the client. I don't want to disappoint my realtor, and I want to make sure that that person, when I give somebody a pre-approval letter, I better make sure that they do not have any problems whatsoever. Obviously, there are things that go and happen. They're like sometimes really like very rarely that, you know, maybe the client didn't disclose, or maybe they lost their job like in the middle of the transaction, things like that you can foresee, and obviously that will prevent the client from buying the house. But for the most part, if I do my job right, we know that client is gonna, in 30 days, they're gonna own that house. So
Okay, so from the time a potential buyer comes in to meet with you and they have all their documentation with them, how long from that meeting till they actually get a pre-approval letter? How long does that take?
Well, when I was not as busy, it would take me literally like 2 hours to do a pre-approval.
Okay.
Once I have all the documents, right? But now that I get so many people wanting to refinance, and more people wanted to purchase and stuff like that, so sometimes it's taking me up to like 3 days to do a full pre-approval, which is still good. Most lenders are still taking like a week or two.
So Alex, it sounds to me like a reputable, good lender is hugely important to you, not only for not wasting your time, your buyer's time, but for emotionally. I know that you are very emotionally invested in your clients, and it sounds like having a lender that really knows what they're doing, that's not, I don't know, blowing smoke, for lack of a better phrase, is very helpful to you. Let me ask you this question. Let's say a homeowner comes to you, they've gotten pre-approved. For both of you, I guess this question, I'll ask you first. They've gotten pre-approved, they've gotten their pre-approval letter for X amount of dollars, and is that pre-approval letter super specific on what the purchase can be? And let's say I found a home for $400,000, but now I went and found a piece of land that I could purchase for $100,000 and build a nicer house for $200,000.
That's actually a great question.
Okay.
And it's happening more and more these days. More and more people are wanting to pivot from purchasing a resale or a home that's already been constructed, and then going ahead and purchasing a lot to build their dream home specific to what their needs are. And most people are unaware that if they've gotten pre-approved for a resale home, that a lot of lenders do not. It does not transfer to a vacant land. It's two different types of loans.
Okay.
So in that case, I would have to refer, well, okay, this pre-approval, well, yes, if you want to purchase it for a home, that's great. But if you want to purchase vacant land, well, we have to go over here and talk to somebody else. Okay, so for that process.
How does that work, Rose?
Yeah, absolutely. There is specific lenders that will do land and construction. In my case, in my company, we do not do loans for land itself, but we do construction loans. So yeah, you definitely got to talk with someone, maybe like even I can figure out which lender can help her in the case that she's looking for a client that is looking to buy land,
And so and this is another question, because a lot of clients don't know the difference between purchasing or having a loan for a vacant land versus a construction loan.
Correct.
So does that mean that you purchase the land with the intention of like the plans for the construction?
Yeah, some lenders will only do a construction loan once you own the land.
Okay.
Right? So that's the difference. Like for the most part, from what I've seen, is you have to own the land. You purchase the cash or whatever you did, and then they will give you a construction loan.
So I can't go to lender A and get my piece of property and then come knocking on your door and say, hey, look, I've purchased this piece of land that I'm making payments on.
Yeah.
I now want to get a construction loan from you so I can actually have a home on it.
It will be really hard.
Okay.
Or it would be two different types of financial institutions that would make those two different transactions
But
happen.
is that possible? I can be carrying both of these loans at the same time.
As long as your credit, we're talking about credit.
And assets.
Right, exactly.
Okay. So it is possible.
It is possible.
Okay.
Absolutely. Which, again, credit. A lot of people talk about credit score and what that means. There's been a lot of attention to how low the interest rates are right now. And they are historically low, as Rose will tell you. However, there are different tiers of interest rates depending on one's credit score.
Okay.
So typically somebody who has the best possible credit score will then qualify for the lowest interest rate, and then it kind of goes up from there.
Okay.
So that's kind of how you do it. And
Absolutely.
I don't know if you break it down into the different 600, 700, 800 range.
Yeah, absolutely. It's very important. Most people don't know how your credit score affects your actual rate, right?
Right.
So obviously, the lower your credit score, your interest rate is going to be higher because that's more risky for the bank to do that loan, right? So unfortunately, that's the way it works, right? So whenever I see somebody, like when my clients, they come in and they tell me, oh, I saw on whatever website, their rate is at 2.5%, I don't know, something crazy like that, right? And I said, did you look if they were credit score, what the credit score requirements were? Are they charging you any points? And they're like, well, I don't know. And then so when they come in, I actually pull the credit and I do a full application, and I tell them, okay, this is your credit score. This is the rate that you can get. They're like, and then I have to explain to them again, because it's really hard to grasp that idea of why they saw something online and now I'm giving them this. So I have to educate them in that sense that what they saw is really not true. Sometimes, and for the most part, we lenders are very limited to how we can advertise things, but some people just get away with putting the stuff out there that it doesn't make sense for the borrower. We know what it means, right?
Right.
Because I know how to read, a loan estimate, but clients don't. And so they, for example, I had a client like a few weeks ago where she wanted to do a refinance, and she's like, well, my lender is giving me this rate, and they say that I have to come in with $16,000. And so I said to her, because I closed her loan like a year before. And so I said to her, she trusts me, And I said, well, let me pull your credit, let's do the application. It turns out that I could do her refinance, and she had to come in with $4,000 out of pocket.
Oh my goodness.
So you have to know who you're talking to, because for the most part, there's lenders out there, and I don't want to trash anybody, but it's true. And I feel like offended. Like I don't want my clients or anybody out there to get involved or they get tricked or whatever it is. What the reason why this other lender was offering him that, I don't know.
That's my question. What is the benefit to that other lender
They
to
don't do
require
the
more money?
research. They don't.
Okay.
Yeah, I don't know. I really don't know, because I don't know how they did the application. All I know is what I was able to do for my client, right? And save her a lot of money.
Okay, so Rose, from what I'm hearing, I know it's very important to find the right real estate agent, somebody that you really connect with. But on the lender side, should a potential buyer be shopping different lenders? Because it sounds like you were the best option for this young lady when this other lender maybe wasn't. Is it a good thing or a bad thing to shop around for lenders?
Yeah, absolutely. It's important that you not only get with a lender that knows what they're talking about, right? And normally clients are pretty good about knowing that, and they also have to feel comfortable, right?
Right.
Because you're sharing all your personal and income information with this person, so it is very important that you feel, number one, comfortable, and that you know that you're getting the best deal. Absolutely.
I have a question for you. So I just graduated college. I've got some student loan debt. I don't want to pay someone else's mortgage by renting their home from them and paying the mortgage for them. I want my own place. I haven't really built up a lot of credit yet. If I wanted to come in to see you, what is my minimum credit score that I could walk in the door and say, here's my credit, I'm just now getting established in the work world. I've just gotten this amazing job that I'm super excited about, but I also have some student loan debt. What's the lowest score I could come in with that I could possibly get pre-approved for a home?
Well, there's different programs out there that will allow for a lower or higher credit score. Normally, conventional loans, anything above 640, you're good, right?
Mm-hmm.
But then with FHA, 620, you can go low, and then as low as 580, and some lenders even 500s, right? But people have to understand, the lower your score, the more you're going to pay on points or closing costs. So what I try to do, at least for my clients, is if they're around 600 or whatever it is, I tell them, okay, let's try to get your credit score up higher to at least 620, because I know that that's kind of like the magic credit score that they have to have and not have to pay so much in closing costs and points.
You make a good point. How do you bring your credit score up, and what time frame am I looking at? It's November. How long would it take me to get to a place where I've got a credit score that I wouldn't be laughed out of the bank with?
Right. Yeah, obviously there are companies out there, credit repair companies, they are specific and they have the license to do that.
Oh.
But I always give my clients advice as to what they can do to keep their credit score healthy.
Right.
Like number one, keeping your balance on your credit cards under 30%. That's always a good thing.
Okay.
Obviously, making your payments on time. That's pretty obvious, but people don't understand how much that affects your credit score. Also, opening new lines of credit that always affect and lowers your credit score.
Especially around the holidays. Sometimes, you go to a store, you're doing big Christmas shopping or holiday shopping, and then they entice you to open up a credit card because you're going to save money. And so anybody who's thinking about purchasing, you definitely don't want to do that.
Right.
It will
Well, that kind of brings me back around to then shopping for lenders, because you pull the credit, right? You would pull my credit. So if I went to see multiple lenders, are all of you guys pulling my credit?
Oh yeah, that's a really important question right there, because there is a time frame that when you're shopping for a house, that if you go with different lenders, we will get the same credit score per se, and it will not affect more or less in the points that they get deducted for pulling the credit many times. And it's just a time frame about 3 to 4 weeks.
Okay.
So, yeah.
And just to backtrack a little, oftentimes this is a question that comes up for my clients to clarify about some of the things that Rose has touched on. One, the difference between an FHA loan and a conventional loan. So a conventional loan, it's typically where you would put 20% down of the purchase price towards the home. So not everybody has 20% to put down on a home.
Right.
So then you might qualify for an FHA, and that's where you only need to put 3.5% down of the home's purchase price towards as a down payment. That's substantial. I mean, really, honestly, for a lot of people who are starting out, they will go with an FHA, and that's their first step into home ownership to make it possible.
Sure.
So it's a great program, and sometimes within those FHA loan programs, you have like your first-time home buyers, and home is possible. There are different programs, but traditionally, other than your VA loans, those are the two ways that one of my clients will ask about what kind of loan am I looking at? Is it going to be a conventional? Do I need to put 20% down?
Okay.
Quite often they're relieved that when they find out they don't have to put 20% down, they can put 3.5% down towards their down payment.
Are the interest rates different? Let's say I have the 700 credit score. If I want to go conventional versus VHA, am I going to pay a different interest rate?
Yeah, there is a difference.
Okay.
Yeah, your interest rate definitely depends on how much money you put down and your credit score. Those are the really good important points that we take in consideration in order to give somebody a quote for a rate.
Okay.
And then the other thing that a lot of my first-time home buyers or buyers who haven't gone through the process a ton, there's a difference between down payment and then closing costs. You know, it's not like, oh, this home costs, you know, $300,000 and then I just need to come in with my down payment and then that's it. So traditionally, when we start talking about numbers, you know, Rose will run an estimated net sheet basically, and it'll talk about those closing costs, which I like to call soft costs. They're taxes that are included. If they're going to think about purchasing a home in a homeowners association, you have to prepay a couple months. Same with property taxes. So there are costs and fees for, you know, her portion of doing the business, or the title and escrow company who handles the paperwork. So there is such a thing as closing costs, which are in addition to the down payment.
And doesn't that also include maybe that first year of insurance or something like that, the warranty or something?
Yes. Mm-hmm.
Okay.
Yeah.
Okay.
Absolutely.
Yeah, that's super important. Yeah, because most people, when they first, you know, try to buy a house, they think that the only thing they have to come in with is a down payment. They don't know about the closing costs. They think that all the closing costs could be paid. I mean, I guess we could get a credit from the seller at some point.
Yes.
Sometimes
That's
it's
I've seen
market,
Alex
of course.
at work. I must say personally that she does go in there and say, you're going to need to take care of those closing costs for this buyer.
I do my best, absolutely.
And
of course.
she could
And
tell
I
you.
thank you for that.
Yeah, you're welcome.
But I think it's important that you tell the buyers
Yeah.
when you can get away with that instead of.
Right now, typically because it's more of a seller's market,
Right.
And there's oftentimes multiple offers being submitted on
Right.
a home because the supply is so low. Sellers are not inclined typically
Right.
to offer that unless a home has been sitting on the market a while. Then you have a better shot. But something that's just hit the market, that's that's cute, it's more
Sure.
challenging for sure. And so closing costs are about 1 to 2% of the purchase price. So that's kind of like a rule of thumb. I try and give a rough estimate so that my clients can be thinking about that as well.
Yeah.
So,
Yes.
yeah.
Gosh, so much information.
Yeah.
Us poor home buyers.
Well, it's important that when you begin, honestly, it's a relationship, and home buying and selling, it's emotional, right? And you have to have that connection, but it really is teamwork. So the person that you select to help you represent you and your interests, it's important that they're experienced and they have a good team
Right.
that they work with, because they're going to help really navigate and facilitate all these little steps along the way to your benefit, and to really also help explain and educate. I mean, that's my goal always, is to make sure that when we're going along through the process that we're educating you.
Right.
I will never have you sign anything that you don't know what you're signing.
Right.
I try and explain everything so that you know what it is that's happening, and I break it down, because if you listen to all this in the beginning, it starts to just sound like gibberish and you're going to tune out right at some point. So we break it down step by step, and we just kind of we educate.
When you say a good team, do you mean a good team within your real estate section, or do you mean with a Rose, with a lender, that everybody along the step of the way that needs to be involved in the process of me buying a home, that I have the good team and that you guys work together in my benefit? Is that what you mean?
Both.
Yes,
Both.
okay.
It's important that I have a team, because I like to make sure that, for the most part, that my clients always feel like they're my only client, even though they're not. I
Right.
really try and make sure that they're getting a VIP experience. So within my team, my real estate team, but also the lender that I work with, the title and escrow company who handles all the paperwork, and even maintaining a good relationship, a working relationship with the other agent. It's really important for all of us really to work together,
Right.
because we have a common goal.
Right.
You want to buy, you want to sell. We need to make it happen for you. So,
Okay,
yeah.
perfect.
Yes, super important, exactly. Like the title, the realtor, the lender, all the agents. because if there is not a connection and everybody's doing what they're supposed to do, that's when delays happen. And I like to be like on top of every client, and like she said, it's like super important to give somebody like that VIP experience, because they're always going to remember you. Like all my clients, they just love me, and they still text me or call me and ask me for questions, and I love that, because that's the relationship that I want to build with them.
Sure. Quite often it's one of the biggest purchases that they're ever going to make, and they're scared.
Right.
And there's a lot of anxiety that goes along with it. So it's our job to make sure that that we make them feel comfortable.
Right.
And really the best way to do that is through education, communication, and knowledge along the way. That's
Absolutely.
yeah.
Because now I just heard there's another entity and there's a title and escrow thing that's got to get involved. Okay.
Think of them like Switzerland. They're neutral.
Got
neutral.
it.
Yeah, for
Perfect.
sure. Yeah.
Rose, tell me something. With the pandemic currently, how is that affecting lenders, and how is it tightening the parameters under which a buyer can get some sort of approval?
Yes, so at the beginning of the pandemic, we were all really a little bit nervous because the liquidity in the market was very low. In fact, a lot of the lenders that were doing jumbo loans, they kind of stopped doing them. And then they started tightening the regulations and the rules, guidelines that apply to each one of the programs. So some people, that either like lost their jobs or they were, furloughed or whatever, at that point obviously they couldn't qualify. A lot of things that happened too is like their income, like even after when everybody went back to work, they might not be working those 40 hours a week they were before. And so at that point for us and underwriting, it's very important that the income is consistent. And at the point of closing, it has to be able to cover that mortgage. And if it's not, he's not going to be able to qualify.
Right.
So some people were affected by that, and which is sad that it happened. But I think things are getting better. I can tell you that a lot of the guidelines that were put in when the pandemic was happening, they're kind of lifted. Some of them are still there, but things are definitely looking brighter.
Okay. So Alex, have you had a lot of homeowners that they are in distress and they come to you and they say, I'm about to lose my home, and at least before I lose my home, because I've lost my job, I'd like to maybe cash out of it so that I'm not maybe in foreclosure?
Right. So when I get that emotional, because that's an emotional phone call, right? You don't want to get that phone call.
For sure.
So I try and give them options always. Like, okay, well, before we jump to that, let's talk about what your options are. Typically, I ask them who their lender is. Have they made a phone call and inquired about any of the forbearance programs? And a lot are unaware that their lender will offer such a program, such as that, because I don't want one of my clients to have to think that they need to do this fire sale,
right?
Because they're going to lose their home,
right?
That's not the idea. Is to displace a family.
Right.
So at that point, I say, okay, well, you know what? Let's call your lender. Let's find out, because if they are furloughed for any reason, I know that they're not going to be able to purchase a home. And believe it or not, with everything that's happening and the low supply of inventory for homes, the rental market has actually gone through the roof. So the rental amounts, the monthly rental amounts have also escalated dramatically. And a lot of landlords have also increased their requirements for allowing a future tenant to come in. So shockingly, sometimes it's almost harder to rent a home these days, unless you find the right landlord, than it is to purchase, because they want 2 or 3 times the amount of your finances to cover that amount, and then they want an extra security deposit, and then on top of that, they also want a higher credit score. So it's a little daunting. And before we go down that road,
Why is a renter doing that? Is that almost like when there's it snows, not that it does that here,
Right.
but when it snows and then the snow shovels are all of a sudden 5 times the normal price? Why are they doing that?
Well, because right now tenants have so many rights, and there was a freeze on evictions. And so then if a tenant can't pay, they're entitled, right, to not have to pay, but that doesn't really translate to the landlord. If the landlord is making payments on the home, they still need to make payments on that home, whether or not they're getting that rental income. So there's a disparity between that. So the landlords want to make sure that they're protected in case something like that happens. They want to make sure that the tenant that they get in there is able to continue to pay. In that respect. So, but back to the forbearance, I mean, perhaps, you can touch on that and explain a little bit better how that works, and how many months they're able to, a homeowner is able to basically delay or postpone their mortgage payments.
Yeah, so different banks are doing it different ways. Some of them are allowing the borrowers to not pay for 6 months, and then they tell them, okay, give me 2 payments, and then we put the rest on the back of the loan. We add that, that those payments that we're supposed to do, they will add them to the back of the loan. They make him sign obviously a document, because obviously they owe that money and they want to make sure they get paid, right? So there's different ways that different big banks are doing it. So yeah, it is very important that people make the phone call to the bank at the moment that they're feeling like they can't make the payment, because that one late payment on a mortgage will not allow you to qualify for a mortgage for a whole year.
Wow.
When you say 6 months, I know that we here shut down in March. I think probably most of the country did that. So homeowners that might have gone into a forbearance, that 6 month mark has come and gone. So are you seeing a lot of traffic with people trying to do something different? And I have another question for you. If I'm a homeowner and I'm taking advantage of a forbearance, but I also own some rental properties, is it safe to assume that you can't enjoy a forbearance on multiple properties? Or can you? Like, when you say that homeowner who you're renting from they've still got to make the payment. Do they really? Are they really having to make it, or maybe they've gone into a forbearance on the property?
Yeah, exactly. So every bank, obviously somebody will have a mortgage with different banks, and they do apply and qualify for a forbearance on each one of those loans, because that was the law that was passed, that whoever has a forbearance, they can apply for a forbearance at any point. And I believe coming up pretty soon, I think they're going to get rid of it. That's the talk, at least. So the people is still there in trouble. They're still able to qualify and call their banks and apply for it. But for the most part, for what I've seen on my clients, is a lot of people, they already went back to work and they're able to make their payments. So yeah.
And on that note, and there are others, but I have a handful of buyers who, both for owner-occupied and investors, who are kind of circling the water, right? They've been watching to see kind of what happens, with the hope that the people who are in forbearance, that they'll be able to come in and take advantage of somebody's situation. So have you seen that there's been an increase in like the notice of defaults, where people have defaulted on their loans, or pre-foreclosure, things like that? I mean, that's the question I get a lot of. Like I said, a lot of my investors are waiting for that, and then some of my buyers are waiting to kind of like take advantage and jump into home ownership based on that situation.
Yeah, to be honest with you, I have not seen a lot of people still in that position. And I think is especially here in Vegas, right? I can say for other states, they're still shut down, and obviously their situation is a lot harder. But I think also what happened was during this pandemic, a lot of families, they got closer together, and then so they wouldn't lose the house. Two family members were moving together, and at that point you have 2 or 3 incomes that were able. So I think a lot of that happened, right? So some people that were renting, they're like, oh, I can't make that payment, I'm gonna move in with my parents, or the parents will move in with the children.
Wow.
Things like that. So to be honest with you, I have not seen here in Vegas a lot of
and that's what I've seen
foreclosures.
on my end as well. So I just, for what we see when we are keeping an eye on basically market trends, and keeping a tab on kind of the pulse of the market.
Yeah, one more thing that I wanted to add to that is I feel like the reason for that not happening is also people, when they really feel like, oh, I can't make this payment, they're selling their homes. And because the homes here in Vegas are selling for like this, because we have so many people moving into Vegas, is crazy to me how big the city is getting, right?
Right. So at that point, they are selling, they're cashing out. They've got some good equity in their homes. Then they feel more comfortable turning around and then renting and having that money sit.
So that's what they're doing. They're telling you they were homeowners and they're going from being homeowners to renters.
Right. Yeah.
I want to ask a question because we've been talking about it, but at the end of the day, I don't know how many people really understand what a forbearance is, because I'll be honest with you, I'm in one. And I don't know if that means at the end of my forbearance, do I now owe the full amount of those monthly payments? Because I think different banks or lenders are different. Do I owe everything that we staved off, or is that added to the end of my loan?
Yeah, so at that point, every bank has different things that they're doing with it, so you'll have to specifically talk to your bank about it. From what I've seen in my clients, they come in and try to refinance. They make them do 1 or 2 payments, and then they add the rest to the back of the loan, which for us, that works, right? Because for a long time, we would not be able to refinance somebody unless they were out of forbearance and they were clear on how much money they were owed to the other bank, right? Because we're not going to take on that,
Sure,
you know?
sure.
So it's too risky for the bank to do that. But if they're adding, let's say you owe $200,000 at the beginning of the forbearance, and then they're adding $10,000 extra that you owe for those months you didn't pay, now your loan is going to be $210,000. Then at that point, and then make one payment, now we can take that person and try to do a refinance. And because a lot of homes here in Vegas gain a lot of equity in the past few years, then they are in a position that are able to do that.
Okay.
So.
Okay.
Something to think about.
Well, I want to do a PSA for joining the military because I'm on a VA loan, and I have to say that the VA called me and said my loan is with a company called Mr. Cooper, and they said we offer incentives to the people that carry those VA loans, so that they let you go about your merry way and add all of that to the end.
There you go.
Great.
Yeah.
That's great.
I was kind of shocked, but so join the military, kids.
Yes. Thank you for your service. Yes.
Thank you. Yeah, for sure.
Yeah. Okay.
Rose, this has been fascinating, and I have a daughter that I want to own her own home. So tell me, how are people contacting you and conducting business with you right now during this pandemic?
Yeah, absolutely. So the best way, and the way I have been doing business since the office closed down, I set up a really nice office in my home that I'm able to do my work.
Right.
And so my company, Loan Depot, we have a really good platform that people can apply with a smartphone or with a click of a button from the computer. Super easy, 15-minute application. Once they do that and click submit, I get all their information, and at that point all I need is for them to upload their documents and finish the application, which could take me like 2 hours.
That's fantastic.
Yeah, sometimes I even like FaceTime with them, or if they feel comfortable, because that face-to-face, I always love meeting my clients in person.
Right.
And actually, it makes a difference because again, clients are afraid. It's daunting. It seems daunting.
Sure.
So being able to say, "Hey, okay, I just sent this over to you." When you receive it, which is how I do a lot of my paperwork that's sent electronically. I'm like, "Hey, when you get this, let me know when it's convenient. let's have a call so we can go over it together and
Okay.
just break it down. Because inevitably they might have questions.
Sure.
And if you have that communication one-on-one, they're not so embarrassed to reach out or to ask a question.
Right.
You know, they don't want to. No one wants to feel, you know, insecure or embarrassed about asking a question. And so, doing it that way,
Right.
it's been beneficial.
I would definitely also like to see the face of the person I'm
Yeah.
sending all of
Right,
my personal
yeah.
information to. So
Right.
that's
right.
awesome.
But you know
Personalize
what
it.
helps a lot? Like a lot of my buyers, they are referrals from different realtors that know and trust me. So that first connection that they get with the realtor is so important, because anything that they recommend, you know, they feel comfortable with it. And you know, obviously,
Sure.
once you meet the person, I will say we all have very good judge of character. You know,
Right.
and, you know, but it's very important to be careful too.
Right. Okay.
Right. Trust. You know, I mean, it's a big word, and it means a lot because again, not only it starts with us, but with the lender. I mean, this is all of your personal information.
Yeah, and we all have licenses that we have to, you know, and rules that we have to abide by. So.
Yeah. Ladies, thank you so much for today. This has been a lot of information. It's very helpful, I'm sure, to a lot of people, whether it's new homeowners or people that might be possibly in fear of losing their home. So tell me, Alex, how do we get a hold of you?
Right, they can reach me. You can call or text me 702-592-5999, or they can email me alex@pearl-alexandria.com.
Rose, how will we get a hold of you?
Yes, so my cell phone number is 702-334-6030, and my email is rtaillie, Taillie, @loandepot.com.
Perfect. All right, ladies, thank you so much. Thank you
Thank
guys for
you.
joining us today. And everybody stay safe out there.